Good morning, traders. Today is January 17th, and we're looking like we're headed into a very interesting week or two before the start of February. Let's get started and pay attention to what's going on in the markets. We've seen some big rotation here lately with a bunch of sideways trading, a brief little breakout right here. This is the SPY daily chart. Brief little breakout, sideways trading, then a fairly solid breakdown on Friday. I've been warning about this, about how the markets were reaching near an extended range, would likely potentially pull back. I kind of thought it would happen back over here near the end of 2020, but we didn't see it. We saw more continuation. Um, Obviously, stimulus and the Federal Reserve dumping money into the economy, as well as global central banks, could potentially push the markets quite a bit higher. But let me flip to a weekly chart and share with you some potential concern related to this trend line, which remember originates way back in 2009 off the lows here, across these lows, and carries forward up to this point. We've recently breached this level, as you can see here, and stalled back below it. Um, Ideally, ladies and gentlemen, this could be a very critical level in the market. We're back to trend levels that we haven't seen in 7+ years. This is a very critical resistance level overall. We've rallied above it, stalled back out here. I believe that my ADL, my adaptive dynamic learning system, predicted some volatility in late January, early February, carrying forward to March and April, then more volatility in July and August and September. So there's a very good chance we could see a pullback over the next 3 to 6 weeks. And ideally, we may see something in this area, approximately a 4 to 5% pullback, and or we may see something that moves deeper, potentially back down into this area, an 8 to 10% pullback. So be prepared. This could be a fairly big rotation setting up. We'll see how it moves over the next couple of days, but we're going to go ahead and take a look at what's happening in the major markets as we move forward. So now we'll go ahead and take a look at uh, the rotational modeling system, and I'm going to share something very interesting with you as we move forward. So the rotational modeling system, and we'll go through these like normal, and I want you to pay attention to the weekly and the daily. Why this is important is long-term trend versus short-term trend. If the markets were to reverse, then we are likely going to see the daily flip into a neutral bearish trigger before the longer-term weekly chart does. And we could see a fairly deep pullback, as I mentioned before, which would put us back down into these levels, which means we could see this stay bullish, the longer term stay bullish, and the shorter term move into a bearish trend. So we need to be aware of how this works and how it operates. Ideally, under Trade Tank memberships and live trade memberships, ideally what I'm trying to do is help you catch swing trades and learn how to identify opportunities. So from a shorter term swing trading basis, a potential pullback here gives us some opportunities to find some good short trades and to try to protect our equities. From a longer term standpoint, a moderate pullback that ends, say, in this area on the SPY or on the ES chart here would be a good opportunity to potentially load up and or try to find some new opportunity as potentially the trend continues back up. Ideally, if my predictions are correct, we're going to see something like this, moderate pullback, maybe not that far, and then a continuation trend, possibly out to here, and then maybe a little pullback, and then maybe a little upside move. And then come August or so, we're going to be looking at potentially a little bit of a downturn, and then maybe a bigger downturn in August, September, October. So ideally, this is kind of what the year looks like it's going to do, and this real June, July, August, September is where we start to see some real risk coming into the market. So ideally, this gives us some good play to trade We've got some good ranges here. Not eight, call it 6 to 10%, maybe more. Another recovery back upwards, maybe 12, 14%, and then a big rotation down, potentially 6 to 15%, maybe. And this is again based on my modeling system. So ideally, this is kind of what we're looking like if I were to make a prediction of what we're going to see in the future. What this means is we need to be good traders in this scenario. So let's move forward. The S&P is obviously bullish on the weekly chart, bullish on the daily chart, bit of rotation here. We'll see how this plays out early next week. The NASDAQ was down quite hard on Friday, 142 points. You can see bullish on the day weekly, bullish on the daily, still in an uptrend. We would be concerned of a pullback. If a pullback were to happen down into this level, we would be looking at potentially a 10%, 11% drawdown. So we've got to be aware of what may happen. The YM is obviously still bullish to the upside, bullish weekly, bullish daily, and you can see this downward channel here. This would potentially provide some real extend right support in the market back down in this area. So we've got to be aware of this trend. If a pullback were to happen, this would be our longer term support right now. Okay, gold. Did some research over the weekend. I'll share it with you. Gold is likely, if the markets do pull back, gold is likely to pull back a bit, maybe down into this area, 1700 maybe. The reason being is gold and silver react to extended market downtrends in the same way that the major markets do. People that are leveraged get trapped in positions. If they have any gold holdings riding this rally up, they'll sell their gold positions to try to offset capital drawdowns in their account. You can see that when the major markets collapsed in March, you can see that gold fell from these levels. Look at this, from these levels, it fell 14%, 15%. So we could see from these levels a potential 7, 8, 9, 10%, possibly down into this level, 1600 again for gold. We could see this happen if the markets collapse over the next 2, 3, 4 weeks, which means we could see a pretty big spike in some index ETFs, for example, dust. We'll have to pay attention to see how gold reacts here to the weakness in the market. But again, I'm under the impression that weakness in the major market will put pressure on gold, especially if the treasury yields and the US dollar continue to show some support. Silver, same scenario. Great opportunity for long-term bulls. We broke out of this range. We're in a new apex formation. We could see a bit of a move back to the downside, possibly retesting these lows, possibly back down into this area. It just depends on what the market does over the next 2 or 3 weeks. If there's any chaos globally or in the US, then we could see gold and silver potentially collapse further. So be aware, we could be back near these lows again. I doubt we're going to end up back into the 17, 16, $17 range, 17.50, but we could. My expectations is right around 19 and a half to 20 and a half. It's probably going to end up being fairly strong support, which is still a pretty big drop. Again, if it gets down to my lows, 19 and a half, roughly right here. See if I can get my mouse to move up a little bit. It's still a 20% drop in silver. Okay, crude oil. Still hovering around the $52 to $54 range, been moving higher. It rotated back down on Friday. We'll see how this holds up. It is still bullish weekly, bullish daily. Natural gas starting to move a little higher. It's forming these very interesting, I want to call very interesting patterns that you can see. Let me see if I can find my drawing tool. I can't seem to find it. There it is. So you can see we've got these rotations and these rotational lows, lower low, higher low, higher low. A very good potential that we might see a move, a big spike move, especially if a cold front breaks out. As far as I know, Supply is still an issue. Demand could skyrocket. We could see a move up above 350 here in the next few weeks. We'll see what happens. As you probably know, I bought down here near these lows. Very happy to hold my position right now, waiting for a big breakout, which may happen in end of this month or in February. I'm looking to get out before March, end of March, looking for a big spike, potential nice run up above 354, and then try to get out of it. The industrial average was lower on Friday, obviously. Still bullish longer term weekly and bullish daily. Little bit of a rotation. Again, you understand my concerns. Let's go ahead and look at the SPY. Bullish weekly, bullish daily, still in a solid uptrend. And let's take a look here at the mid cap, which has really kind of been rocketing higher. You can see we had this big rocket, nice solid uptrend. Concern here is it's kind of flagging out a little bit, sideways rotation with some downtrend. We'll see how next week, what happens next week, but could be looking at some real potential downside over the next 10 to 20 plus days. So pay attention. Lastly, the move in gold may set up a very good opportunity in dust. Now, obviously, this was a reverse split back over here. So we'll try to spread this out, give you some real indication what's happening here, and show you here that we've got a kind of a solid up move last week. Looks like it may provide some real opportunity. If gold were to break down, there's a pretty good chance that this could move from these levels where we're at right now up above these highs back here, and potentially end up in some area 28 to 32, back targeting these highs here, 34.25. So this is a pretty good chance for a 20 to 35% rally if gold does what I think it's going to do, which is a pretty sharp pullback if my predictive modeling system is correct, and gold may end up back below 1790, 1775, maybe a bit lower. This is a 2x ETF. Inverted gold miners could see a pretty good move here. Nice little 20-30% rally or more would be fantastic. Okay, so now I'm going to share with you something new that I'm posting up on the websites this week. This is my TT scanner for 2021, and we're going to follow this with the index ETFs as you're seeing here. And what this is basically designed to do is to show you alternate discretionary trade setups that occur that you can take as you wish or not take as you wish. These are essentially an extra value for members to go ahead and follow these index ETFs. The idea here, ladies and gentlemen, is that this is a single window scanning about 30 different index ETFs, and it's fairly clear to see. The symbol is here, the current price is here, the daily change is here. This is done on a daily basis. This is a range expansion system that tells us whether or not it's moving higher or lower, and you can see here, real simply, this IYG moved down 1.97 on the close, but it actually reached to negative 2.0% downward range expansion. This moved up 0.50, whereas it reached here 0.60 percentage. The scenario here is this measures in 25 and 50% increments. So the idea here, ladies and gentlemen, is you'll see this move. This is designed to tell you the maximum minimum range expansion taking place over a single interval. In this case, this should have been weekly. If I got this set up right, yeah, it should have been weekly. Okay, so now this is the trend, the primary moving average trend, telling you whether the moving averages are moving higher or lower. Obviously, in bullish triggers, we want to see this move higher. And if we don't want to see it move lower, it can move lower over longer term trends. But anytime something is moving lower in a long trend like we have here, this is indicating that it's pretty much flagging out. It's moving sideways into consolidation. This is the bullish bearish trigger count system, this column here. This tells us how strong the trend is. This is ranked by the strongest trend up here, IHI, to the weakest trend down here near the bottom. This is the current trade trigger. These mean that the trading system is long these symbols. All of these symbols have long trades active. This is the trend direction, telling us whether or not it's bullish, bearish, distribution, whatever. And this is the 10-day average, how long price has been above the 10-day average and how long prices have been up above the 50-day average. Now, obviously, this is on a weekly basis, so this is a 10-week or a 50-week. This is in trade, how many bars, how many weeks. So this tells us we've been in this trade for 32 weeks. We have an entry price of 267.05. We have an in-trade profit of 25.03%. Target 1 has been reached at this level. Target 2 has been reached at this level. And our current stop is right here at 291.36. So you can see here we entered at 267.05 and it's currently trading at 333.90. So you've had a pretty good opportunity. Now let's take a look at a newer trade. So here is a trade that occurred 4 bars 4 weeks ago. It was moving lower. It's the XLE moving lower in an uptrend trend, long, bullish, a 5 ranking. It's 10 weeks above the 10 period moving average, 10 weeks above the 50 period moving average. Entry price is 41.75. In trade profit is 2.4%. Target 1, target 2 have not been reached. That's why they're in black. And this is where our current stop level is. Ideally, what will happen with this rotational modeling system and this scanner is you will be able to identify trades as they're occurring and as they're setting up. New trades will indicate with a long, and they'll tell you with either a 0 or a 1 here that it is a new trade. So we don't have any new trades right now. Closest thing we have to a new trade that's fairly flat would be this one 4 bars ago, this one 5 bars ago, and this one 5 bars ago. Beyond that, we have this 8 bars ago and 8 bars ago. These have already reached targets. So these have not reached targets yet. This has already reached targets right here. You can see it's up 3.4%. We got in 91.25. It's already reached a 97.43 target. So ideally, as we go through this every week, we're going to get new triggers, new setups. And remember, you only want to trade in the direction of the rotational modeling system. So back over here, we're looking at the SPY. The rotational modeling system is bullish, the weekly and daily. You do not want to then start taking trades over here with these short trades. Even though they're positive, you're moving against the market. Some of these may be setting up good triggers, but they're moving against the market. Ideally, we only want to take trades in sectors that are aligning with the rotational modeling system. And we're going to get new triggers and these will rotate. So hypothetically, if the market changes direction and starts to move lower, we're going to start to get a lot of short trades and bearish triggers setting up, okay, except for the inverse ETFs. So next, we're going to go ahead and take a look at the Fang Index, broke down lower. Could be a big rotational capital sector, capital shift moving away from Fangs. We know that there's been some issue with Facebook and Twitter and others over the last week or two. This could be a fairly solid breakdown, could be targeting back down into this area or the middle channel of this upward pitchfork. These are standard deviation ranges, so we've been up near this upper range for a while. We flagged out and starting to break down. That's why, again, we could see a moderately strong breakdown. A 100-point drop, which would put us from where we were up here to right here, would essentially be a 10% drop. Another 100 point down to 800, where the current middle level is, would be a 20% breakdown in the Fang Index. Is it unlikely? Oh, I don't know right now. We'll have to see how this plays out. A 10 to 15% move could happen. A bigger move could actually happen depending on what happens with these social media companies. The U.S. stock market index has stalled into a doji-shaped pattern after a very solid upward rally. You can see this rally accelerated on Fed news, stalled before the election, rallied after the election on optimism, and has stalled out up here. Very concerned that this might be the sign of a broader market peak right now. We'll have to see how this plays out. The smart cash index looks very similar, still a bullish candle, not quite a doji. This is a little bit more of a spinning top pattern, although quite big for a spinning top. Long and short of it, we've still got this upward trend. We've broken back up to this middle level. We've extended. And I want you to pay attention to these rallies with the smart cash index and the US index in comparison to this chart, which is the volatility index and the Fangs index. The volatility index is starting to move lower, which means that we're not seeing real solid follow through across the major markets. It shows us that we're starting to see some downward activity, which is partly due to the increase in the VIX and partly due to the rotational trends that are setting up in the Fangs index and others. So remember, we have part of this being Tech L, which is technology long. If we were to see a bit of a breakdown here, our first target would be back down here. It would be a roughly 15-20% breakdown in this index, possibly more, 20-25% breakdown in this index. But if we can't hold at this level, and if we revert back into this downward trend channel, then ladies and gentlemen, we may be looking at a deeper downside move or just a big washout low back down into these levels. This type of move from here down into this 6, 7, 8 area would represent a pretty big washout low, possibly 15-16% downside move in the major markets. The valuation index, which I've done quite a bit of research recently, is starting to move lower. It's down here near these support levels. We could find support at this level. If we don't and it breaks below this low, then we're going to be targeting this low or the midpoint of this range, which I like to be about 225. So we really have support about 245, 246, and 225. If we can't hold at that level and valuations drop, then I think we're going to see some real concern in the market. What I believe is going to happen is we're going to see a bit of a washout, maybe a washout low happen with lower price movement, a bit of a reset, and then back into trending, kind of like I showed you back over here with the SPY right over here. Bit of a washout, back into trending, and then more of a washout near July, August, September. And I believe that's it. Oh, no, we have the metals index. Okay, metals likely to try to move a bit lower. So like I said, they're falling. If the market falls like I expect is going to happen over some moderate rotation, deeper lows, we could come back and retest these lows, could get a bit lower back into this area before finding a washout, kind of like we did over here with the COVID lows. Deep low, washout, find support, stall, and then start a rally. So we could see a deep low coming back down into this area, rally back up into this support area, possibly back up above this red line here, find support, and then begin to rally higher. So it could be a very good opportunity for metals traders if they know what to look for. Generally, my warning is that we're going to see some potential downside move between now and the end of February, early March. This would put us right about here where a bottom is forming. So this area, right in this area, could be a fairly deep bottom back down into this 3350 to call it 3150 low area that would then start a new rally back up. We'll break new highs, possibly, very likely. That's the way the market works. And then come August, July, August, September, some sort of a breakdown in the market. And this looks very similar to 2018. So let me come back over here, show you what we're looking like. So something similar to this, ladies and gentlemen. A rotational low stalling out into March, back up to new highs as we saw right here, August, September, possibly a very deep low, possibly carrying into the end of the year. I don't think so, probably more like October, November, and then we start a new upside rally again, potentially. So again, this year looks to be setting up very similar to 2018. The bigger concerns that I have is that we have this, and let me expand this a bit. We have this range from these lows roughly here across here. I'll just draw it across there. And again, my bigger concern is that this is a precursor top to a failed rally. So essentially, if we come up here, flag, have a pull back, flag out up here, break down, potentially find some support across here, break down off of that support, then could we then see a big breakdown move that occurs? This is what an exhaustion phase rally end looks like. We reach a peak, we pull back, we flag out a little bit like this, flagging out here. Let me try to bring this down. Oops. Flagging out here, sets up a breakdown move that then attempts to find support across here. Before finally breaking down in this manner. So hypothetically, if this sets up a base, this flags out and breaks like I'm showing right here, then the next phase is to find support at a lower level, stall across support, and then we have to be very careful of that support breaking. If that support breaks, wherever it is, then we're looking at a deeper downside move that could potentially attempt to set up a very deep bottom. Okay, that's it. A little long today. Look for the TT Scanner app posted up in Trade Tank and Live Trades. Let me know if you have any questions, and I'll probably do a video on the Scanner app so that you guys can have some more information on it and what it means. Remember, all the triggers back over here in the Scanner app are fairly extended at this particular point in time. All of these have reached targets. The only new ones we have are right here that haven't reached any targets yet. This one has reached one target. There is not really anything tradable in this area. You really want to be in the 3 to 6 range. Anything up in this area is strong. Now remember, 6 means it's been trending quite strong. 5 is the next ranking level. These are big runners. So remember here, we got in at 108 here, and it's currently trading at 151. So we've had a 40% rally, and this tells you how much the markets have actually rallied. So here's a good trade. It's 32 bars ago, the IXJ, 32 weeks ago, but again, it hasn't moved up substantially yet. So again, some of these will give you some real good opportunity when they happen, but this is designed to give you more opportunity to take discretionary trades on your own following my research. And ideally, every week, this list will change in some way, shape, or form, and potentially new triggers will appear. All right, that's it for now. We'll talk to you soon.